This is the Investor Connect podcast program. I'm Hall T. Martin. I'm the host of this show in which we interview angel investors, venture capital, family offices, private equity, and many other investors for early stage and growth companies. I hope you enjoy this episode. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Nish, Krishna, CEO of Lendgrow, Inc. Lendgrow is a fintech that aims to connect borrowers with 1,000 local lenders that are often hard to find online and usually have better deals on loans. Nish, thank you for joining us.
Hi, Hall. Nice to join here.
Great. So what was your background before founding Lendgrow?
Yeah, so I mostly spent the past decade in lending space. Early on in my career, I started in Capital One, where I started the career in corporate development team and led a few deals for Capital One to acquire large co-brand card portfolios. Things like Kohl's co-brand card, which was a $4 billion portfolio that Capital One acquired, and we bid for the Target portfolio. It was another $8 billion portfolio, which we did not win. So essentially got a chance to look at, through Capital One, at how some of the analytically led organizations, especially in financial services, use a customer-centric approach and digital experience to set up and run these lending businesses. After that role at Capital One, I also had the opportunity of running a few businesses at Capital One, card business and a small business lending. And then after Capital One, I was at M&T Bank, where I helped set up the Center of Excellence for Customer Growth and Customer Acquisitions. Spent some time at E-Trade in direct brokerage business in a similar growth kind of a role, helping them with digital transformation and becoming more analytically oriented. And then right before starting Lendgrow, I was hired by PenFed, where I spent about 2 years helping set up the consumer loan business unit. Things like personal loan, student loan, and home improvement loans were the products that were part of this business unit, and had this wonderful opportunity of growing this business from scratch to about $1.2 billion in outstanding loans in about 18 months. And that led to starting Lendgrow.
Great. So what led you to start the Lendgrow, or can you tell us more about that?
Yeah. So I think it was basically we stumbled on two insights, both me and my co-founders. So the big one, I think the most important one of those two was there were many local lenders like PenFed that were offering better deal on loans than some of the bigger banks and online lenders, and the consumers were largely unaware of them. So there was something that was beneficial to the consumer. They could save tens and thousands of dollars over the life of these loans, yet they were going and making suboptimal choices. The second thing was that this was largely overlooked by some of the competition in the space. So if you think about marketplaces, some of the names that come to mind, LendingTree, Credit Karma, NerdWallet, they basically focus on some of the larger banks, online lenders, and credit unions or banks with a few state of charter usually find it difficult to find the way on the marketplaces because they were on a cost per lead kind of a referral model basis. And so those two basically insights, as we were building the business at PenFed, which was the second largest credit union and had some of the similar challenges, basically came together. And we felt that with Lendgrow, we could offer an alternate to the marketplaces out there, which focuses more on local lender, cheaper money. So it's, of course, there's this large pool of about 1,100 lenders that need this and are hungry to get a share of the online market space, but also the consumers who could save thousands and thousands of dollars. And so started Lendgrow with the Chief Credit Risk Officer of PenFed, Fred Rubin. And then we were joined by Harris Cactor, who had worked earlier on at Capital One and who led organic growth at Capital One to start Lendgrow.
Great. And so what's your advice for people investing in startups in the fintech sector? What do you tell them to do before they write that first check?
Yeah, so fintech is a great sector. I mean, as all of it has gotten a lot of attention from investors, media. It's one of those, it's an old and complex regulated industry, but there are lots of other regulated industries like healthcare and other industries like that. But I think fortunately, financial services have benefited and sort of drawn talent and attention from a lot of co-founders who have transformed this in financial services through tech-led innovation. It's opening up all kinds of exciting businesses and customer experiences. If you just look at year 2019, there were 233 billion in M&A, and it happened in the fintech space. About 1,000 deals, a little shy of 1,000 deals, 23 of which were $1 billion plus. So, of course, if you are thinking about investing in fintech, at a very high level, we'll talk about some specific investment themes later on, or we can talk about that later on. But team and sort of the thesis, and you're looking at it, I think one thing you might want to evaluate differently in the fintech space, and especially seed stage startup and fintech space, is a team. So unlike some of the other, team is always important in any startup. But it's more so in a regulated business where there are some idiosyncrasies that you have to be aware of to be successful in the space. And so prior knowledge and experience of having done this is important. And that's why you see a lot of successful fintechs like Lending Club, Credit Karma were founded by people who had operated in that space, right? And if you talk to some of the big VCs like Anderson Horowitz, they talk about how college dropouts and others are the type of team or founding members they like to see. You will find that less in successful fintechs. So that's one thing to keep in mind. The other one is, of course, the thesis that you are investing in. And the early wave of fintechs, you had a lot of challenger sort of fintechs, I would say, things like Lending Club, SoFi, Betterment, Robinhood, right? They were going head to head against established players. I think that was the first phase. Some of the big opportunities right now are with fintechs that are more operating as what I would call as frenemies, right? Friends and enemies at the same time. They are not, while they're disintermediating the established players, the banks, the credit unions, or direct brokerage, etc. But their success is not dependent upon displacing them, but sort of working with them in sort of capturing more market share or doing something more efficiently or creating space. And so, again, these are at very high level investment thesis level, but these are some of the high level patterns I would for as an investor in fintech space.
So on the other side of the table, what's your advice for people running startups in the fintech sector? What do you tell those founders to do before they go out to raise funding?
Yeah, so it's similar. I think it's just, how you solve for it. So I think, again, as I said, regulatory risk and compliance are one of the big pieces of the puzzle you need to solve. And so you need to have a Yoda in your team, so to speak. This could be your, an advisor or a founder who has operated and in this space and can guide you through the maze of regulation. For example, in our case, when I started Dendro, I had a good handle of the tech, the business, the product side of it, but chose to have Fred Rubin, who's our co-founder, join from day one. So I think that things like that, Fred has been a chief credit risk officer at 5 to 6 banks. He was there at PenFed, National Cooperative Bank, and others. He was an OCC bank examiner. So having somebody like that who can tell you where to go, where not to go, or where the cost of engaging and solving from regulatory compliance side will be expensive. I think that is important. You need not necessarily have it as a co-founder, for example, like we had, but it needs to be solved somehow. So on the business model side, similarly, as I said, frenemies, I think that's the business model that has a larger, more valuable, I think, today, as opposed to sort of challenger sort of fintech brands or business models. And so how do you solve for that as a fintech startup co-founder or founding team member? I think you have to think about how you get there, right? And have that partnership going on from the get-go. So, either engaging with accelerators that a lot of financial services organizations now have, or corporate venture groups. So these companies are thinking about partnerships from the get-go through associations or industry groups, or for customer acquisition, or just partnering with a large bank or credit union or financial services. I think those are going to be key. Again, for example, here at Lendro, while we acquired some really big banks in the local lending space, regional space like Citizens by ourselves, in fact, all the 5, 6 earlier bank partnerships came by ourselves. We close it through our own sort of contacts and effort. We did end up signing a deal with Stifel, which is one of the leading investment banks in the mid-market segment, and has a Rolodex of all the CEOs and CFOs that they work with on corporate financing side. Has a large 40 people sales team. And so we as we were looking for our growth, that was important to solve for it, and kind of goes back to some of the challenges or unique idiosyncrasies of the space.
So let's talk about the fintech industry itself. How do you see it evolving and where do you see it going?
Yeah, so I think more than fintech, let's talk about financial services. And financial services is a very large space, so we'll sort of let's draw some boundaries. We'll leave insurance out, for example, right? And so it's useful to think about sort of so in financial services, there are, from a product standpoint, there are 4 or 5 big spaces, right? So there's payments, there's banking, there's lending, and then there is wealth management. And you would see fintechs in all of these spaces, some more so than others. So it's useful to think about sort of what's happening in the space, right, from a consumer and regulatory standpoint. So those are the external or inherent shocks in the systems or changes in the systems that are happening that then gets realized in terms of innovation, either it's to fintech or the existing players reacting to it. So on the consumer side, if you look at the large trends, there's a lot of indebtedness among the next big generation that is coming up, millennials, or they have come up. We all know about, student loan gets talked about a lot. An average millennial has a student loan debt of north of 30,000. So that's a substantial sum of money, right? The savings, the wealth, and the income is not at the same level as some of the previous generations because they have suffered 2 shocks back to back, space of 10 years. Early on in their career, we had the Great Recession from 08 to 10, and then now we are going through another one. And if you look at the unemployment levels, 14% for millennials, 27% for Gen Zs, these are concerning numbers, right? And so there are the concerns, and also there are some opportunities. And so there are some of these indebtedness, early on wealth gap. There are some fundamental changes in sort of the society and the economy. There's a lot of automation, tech disruption going on, like with things like Uber that have come up, have taken out a whole section of economies, transforming them, AI and automation. And so that's one of the things. It's changing the way people consume financial products or the type of financial products they consume. And, that closes some business and opens up opportunities if you are a fintech thinking about a business or an investor thinking about what businesses will have some long-term support. On the regulatory side, I think basically the story is there's a lot of uncertainty. So some of the old regulation around CFPB, Department of Labor fiduciary rule, that affected some of the fintechs in the wealth management space or established players, they were put on a back burner, and as the administration changed hands in 2016, it's unclear what will happen. Some of the new regulation that will happen regardless of who is in, what happens post November 3, things to do with fintech charter, etc., are still unsettled. And so there's that uncertainty and cloud that, some of which will settle in the short term, others still kind of a little bit medium term, and that will determine some of the winners and losers in the space.
Great. So let's talk about your investment thesis for the fintech sector, where you think is the best place for investors to be focusing. What would you say is the best way to look at the fintech these days for making a return?
So I think I would suggest there are 3-4 big sort of bets that are out there that, we can think from an investment standpoint. And again, these are sort of my view of the world in terms of what I've observed running businesses in financial services, whether it's on wealth management side or banking or lending side. So I think the first thing that I think is very interesting and always has a better valuation long term is what part of the value chain is the fintech or this new innovation displacing. So things that are more closer to the consumers, a D2C or a B2C, will always have higher valuations in the end. The B2B probably still, there are more fintechs in the B2B fintech. On an aggregate, probably they have a larger net aggregate valuation. But if you're looking at individual bets, right, those that are going to be big unicorns, that's the side of the spectrum, I think, that is more attractive. The second thing is businesses that are going to solve for some of these involving challenges from a generational wealth gap and indebtedness standpoint are going to be, we are still like, the traditional businesses are still very much tied to sort of mortgage investing, lending, banking, those sort of things. And businesses that think about solving for the needs of this new generation, I think that those are going to be interesting and probably have more long-term potential. Then there is, of course, always new ways of thinking about finance and money, which is cross-generational. And I think whether these are new product ideas or which opens access to the underbanked population segments where it was always there, I think that those are a third set of things that are always, they are a little bit harder to find, but they are usually have long-term potential. And then finally, I would sum it by saying that some of the sectors, like when you look at payments, payments, lending, banking, and wealth management, some of them are a little bit overcrowded and some of are underpenetrated. So I left insurance out earlier, but insurance is one sector which is underpenetrated. Payments, wealth management, some of the things that's happening on the student loan side with like income sharing agreements, etc., are a little bit overcrowded at this point of time. And so that's worth thinking about if you're jumping in that space.
Great. So what are the challenges in starting up a fintech company these days?
I think we've already talked about some of the execution challenges, right? So navigating risk compliance efficiently, access to market, to partnerships. I think beyond this, there are two other things that from an execution point becomes meaningful. So fintech is a crowded space compared to some of the other areas of innovation, healthcare and agriculture and those sort of things. So differentiation is key, right? Differentiation is key in any startup in any sector, but in fintech, especially in seed stage, this is even more so. So whether it's the business model, the customer acquisition, product, that is really something that is intensely analyzed more so than probably in other sectors beyond sort of the regular things like team, idea, thesis, those sort of things. The second thing is attracting talent, right? And so we talked about like having a regulatory compliance oversight, whether through advisors and co-founder, but it's just the talent pool, like the type of people you can hire is very, it requires somebody who has prior experience, whether it's in technology, so on the technology side, when you're talking to engineers, this is somebody who has worked and understands some of the big sort of integrations to core banking platforms or neural networks and those sort of things. It's not about building an app or just a customer experience. And so that is important. When you are thinking about hiring a marketing person, there are a bunch of regulatory compliance related things that you need to be aware of. And so access to the talent pool and sort of being able to have a reliable sort of channel through which you can recruit, especially talent which has spent some time in this, is key to success. So I think those two things, additional things I would add to sort of some of the things that I already mentioned.
And then for the investor itself, what do you think the challenge is for them in the fintech space and evaluating startups and making investments?
So I think we talked about sort of like some of the things to keep in mind, just as like what are the challenges that the founders are facing. I think deal flow is key, and early stage fintechs, of course, are heavily quoted by institutional investors. I mean, if you look at something like Robinhood, they had 14 investors. It was a 3 million round from what I recall. Of course, the institutional investors tend to lock out, and even those 14 investors were some of the early investors in the firm. And so I think that is key beyond some of these things that we have sort of mentioned. Like we had similar thing that when we were working with 10X, who is investor in LendGrow to allow some of the friends and families and other investors to participate in the round. And so I think if you are as an angel or an accredited investor sort of getting in early on in the game with some of these companies that get picked up by institutionals would be something that would be interesting.
Great. So how does LendGrow fit into the fintech landscape? Where exactly does it fit and what does it do?
Yeah, so we are, as you mentioned, we are connecting 1,000 so plus lenders. We are in the business of making them more accessible to the consumers. They're about 30% of the market, 6 trillion in assets. We believe they have better products because they have underdeployed liquidity. They have a lot of secured on the books. And so they're willing to mark down the rates, I think. And so we are going after an underserved market in terms of the value chain. We talked about the value chain. So we are a B2C business. So we are focused on sort of that, holding that customer relationship. And then from a differentiation standpoint, both in terms of the markets that we served and the competition, we are doing something very different. And so that gives us some advantages. So we can charge a premium. Our cost to acquisition is lower. We signed up. When we opened, it was easy to sign up banks. And then with the Stifel partnership, we have a pipeline which we're sitting on and sort of have pushed back on it. So I think it gives us some natural advantages. It fits with some of the thesis that I think would be important in this business. Another thing I would like to add on thesis is like operate more as frenemies, or like we are not a challenger bank or a fintech. We are working with a segment and really helping that segment capture more market share. So there are some business model type of things of how we sort of like approaching this. And then of course on the execution side, as I mentioned, like we have, whether it's a co-founder like Fred, who has, as a former OCC bank examiner, keeps us honest and efficient, or advisors such as Sam Yont, who's ex-CM of LendingTree. We have access to a network of advisors who help us shape this company as we are setting this up. And then finally, just having operated in this space, we have a large diaspora of talent, whether it's from Capital One or E-Trade, that we tap into as we're thinking about growing the company.
All right. Well, in the last few minutes that we have here today, what else should we cover that we haven't?
Well, I mean, if you're interested in fintech, I think, as I said, it's a great space, very evolving, very active. I would point to other resources that would be worth keeping in your radar. FT Partners, which is kind of positions itself as the only investment bank focusing exclusively on fintech. You would see a lot of like market deals pass through them. So you can, definitely they have a newsletter and fintech update, a quarterly update that you can subscribe to. Anderson Horowitz has a fintech newsletter. I think that's really good if you want to stay abreast on this industry segment. And we are just very excited to partner with 10 in this our current round. We just closed a few weeks back, about 900K and of the 2 million round that we're raising, and we're looking to partner with 10 and investors in your network to raising another 500K, and the balance will come through institutional investors. And very excited to some of the recent transaction that beyond sort of the user growth that has happened with LendGrow, and I'd love to share it with your base. We just added former global CM of Hilton, current board member of Shift, and Kelly to the board earlier this month. And we are looking forward to hiring some of the key team members and bringing on new partners on the LendGrow platform.
Great. So how best for listeners to get back in touch with you?
Yeah, that's very easy. I mean, you can just drop us an email at IR, that's investor relations for short, ir@lendgrow.com. You can also just go to lendgrow.com and contact us. And, there's a little web form that you can fill to get in touch with us. I'm very reachable on LinkedIn, Nish Krishna. If you want to look me up and send me a message, any of these three channels, would get across to us.
Well, we'll put that in the show notes. I want to thank you for joining us today and hope to have you back for a follow-up soon.
Yeah, absolutely. It's great pleasure talking to you.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Hall T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinions of Investor Connect. This podcast is for informational purposes only and should not be relied upon for the basis of investment decisions.